All right. There's this theory that's been circling around the internet as of late, and it's a theory regarding why. Why, despite all the positive news we've been hearing about crypto this year, why does the market continue to correct? And why, more specifically, why is Bitcoin showing such incredible weakness in this last quarter, Q4 of 2018? What do you think? Because on this channel, we've already discussed several reasons why the market continues to correct, continues to crash. But in today's video, I want to introduce one more reason into the mix. The real reason. The real reason behind Bitcoin's price crash is revealed. And today, on this channel, in this video, we're going to reveal it. Here at Altcoin Daily, where you subscribe for a video on crypto every day. My name's Austin, and like always, let's give the video a like, and let's jump in. What do you think it is? A reason that we have not discussed in prior videos. Well, according to this article, Bitcoin investors in the United States are selling off their crypto to pay off capital gain tax. Interesting. Essentially what this article is claiming is that because of the incredible gains that whales, institutions, really just investors, because of the outrageously positive gains that investors saw at the beginning of this year, and because every single transaction in crypto and Bitcoin is a taxable event in the United States, that now that the world market, as well as the crypto market, now that these markets are doing so poorly, and because these investors have to pay off these incredible gains taxes before April, that they're pulling money out of crypto and they're using that money to pay off their taxes. Interesting. Let's continue. First-time investors in Bitcoin are faced with large capital gain taxes from the profit that they made in 2017. Reports show that they are now selling off quickly before they file their taxes in April. Interesting. Reports show. We'll discuss that in a second, but first let's just discuss what exactly the capital gain tax entails. And this article lays out if you bought within the last year or if you've been holding off many years, or if you bought many years ago, what taxes you'll have to pay. If an individual, maybe you, maybe me, buy and sells Bitcoin within the same year, the person will be taxed on short-term capital gains, which can be as high as 39%. Wow. Outrageous, depending on their tax bracket. And I just want to point out, I'm not a financial nor a tax expert, so, take these opinions with a grain of salt, but just know that 39% not only depends on your tax bracket, it depends on a lot of things, like when you bought the crypto, and the list goes on. But anyway, you'll have to pay a high amount if you bought or sold Bitcoin within the last year. What if you bought Bitcoin several years ago, but now, because of these outrageous gains, you got your Bitcoin out, you cashed out. However, when a person holds onto Bitcoin for more than a year before selling, it will only be liable for what the IRS refers to as long-term capital gains. The rate for this kind of tax is significantly lower, from about 15 to 23.8%, compared to the outrageously high 39%. But either way, this article is claiming that because they're now forced to pay off these incredible gains on their taxes, that's why the market is dropping. What do you think? Me personally, it brings up two questions. First off, this article says that reports show. They list no reports to back up their work. And I did a little digging on my own, and I couldn't really find any reports. So I'm taking this article sort of with a grain of salt, because I just don't have enough proof yet to know. And also, to me, this brings up another question. If you made so much money in these gains that you saw at the beginning of the year, wouldn't you have the money to pay your taxes already? I mean, yeah, 39% is a lot, but if you made a lot of money, it shouldn't be a problem. That's just where I'm coming from. But I liked this article because it was a great jumping off point for me to do a little more digging. Which brings me to my reason. I think I have the real reason behind Bitcoin's price crash. And when I say mine, I mean from a community member like you. This is a comment that somebody left in my video. Bitcoin is dangerously close to capitulation. And I mean, he listed it publicly, so I don't think he minds me reading it, but I'm not going to reveal his name just yet. But I mean, you can obviously go there and check it out for yourself. But according to him, it's not, we're seeing such weakness in the market. It's not because of capital gain taxes. It's because of capital loss taxes. Because so many investors are seeing such incredible losses when they thought they'd see gains this year. That's why the sell-off is happening. An interesting theory. Let's check it out. And before we get into this, just know this dude could easily just be an 11-year-old in his basement, or he could be the smartest guy in the room. I'm not really sure. No really way to know. But one more disclaimer. Think of this channel as just two people, you and me, having a beer, talking crypto. So when I get these comments like this, I take it as just a comment from a buddy. We're out at a bar, maybe having a Christmas ale, and talking crypto. I don't necessarily take it as fact, but I do take it as, information I can use as a jumping off point. So let's check this out. I work for a large investment firm, and their crypto division started this summer. We deal only with Bitcoin and Litecoin so far, with some beta offerings and a few others, ADA, stablecoins. Then he gets into taxes. The new tax law and capital gains have many whales and institutional investors dumping Bitcoin to lock in losses for tax write-offs. The downtrend will pivot up or flatten out consolidation after the first week in January, starting in Asia. So he's saying that these whales, they're not dumb. They want to claim losses on their taxes, and that's the reason, and they're doing it. And we'll see these losses until the next year, January. From our end, it's a tale of two sides. It appears many large Asia investors are waiting for a recession confirmation to park risk-off stock market money in metals and crypto. So Asian investors are waiting till they get whatever confirmation they're talking about of a recession. Until the recession happens, they're not going to put their money into metals or cryptos just yet. That's the reason the market's not going up. That's Asia. While as the West, America, and others, on the other hand, have billions of money on the sidelines waiting for a Bitcoin uptrend confirmation. We believe that both will coordinate at some point in 2019 and synergistically drive Bitcoin up. If it breaks the previous high, it's unlikely to stop anywhere short of a head-scratching valuation. So again, this is just from one guy in one investment firm in one part of, I'm guessing, the USA. And he's saying Asia is waiting for confirmation of a recession, as opposed to the West, places like America, are waiting till they see clear positive uptrends in the market. And either way, those two things will collide sometime next year, and that's when the market will start rising. Again, I gave this a like, I gave this a love, because I appreciate that insight. This is I love having a beer, talking cryptos. In fact, I'm gonna get a beer right after this, because I love this detailed analysis. But anyway, two opinions, and I would love to hear your opinion down below. And are you still with me? Because, well, again, this just could be some 11-year-old in his mom's basement. It got me thinking. To me, it makes a little more sense that a lot of investors would want to take losses on their investment. So I did a little more digging. So team, if you want to give the video a like, if you found some value thus far, or maybe subscribe to the channel, I'd appreciate it, because I want to give you a little more research that I did on the matter. What does it entail to take a capital gains loss on your taxes? Check this out. When you sell your crypto for less than what you purchased it for, you can incur a capital loss, and you can use this loss to offset gains from other trades, or even a gain from the sale of other property like your stocks in your portfolio. So you can sell at a loss and offset other gains. Let's keep going. Unfortunately, in the crypto landscape we are currently experiencing, there are plenty of losses to go around, and it's wise to file these capital losses in order to reduce your taxable income and save your money. So if any of you guys bought during, all-time highs at the beginning of this year, this might be something to look into. But what are the specifics? Net capital losses up to $3,000 can be deducted against any other type of income. So I don't know how much you invested, but you can only deduct up to $3,000 this year. And to do that, we're going to look at what this looks like in real life. And I want to get to an example. If that made no sense to you, Don't worry, this channel is all about offering as much clarity as we can. So I'm going to get to a real live example in a second. But if you want to get more details on how to report a crypto loss on your taxes, you need to report each trade that you made to the IRS form 8949, sales and dispositions of other capital assets. I'll leave this in a link in the description below. Check it out for yourself. But let me give you an example to make this more clear, because the IRS has a $3,000 loss limit. The IRS allows taxpayers to deduct $3,000 in capital losses for any given year. Any loss beyond that needs to wait until years later. Here's the example. Dan the man, purchased one Bitcoin in early March of this year, and he purchased it for about $11,000. By Thanksgiving, after nearly a 70% plunge in the Bitcoin price, he realized that it was a bad investment and unloaded it for $3,800. So, if Dan bought in March and sold in around Thanksgiving, Dan lost over $7,500, an incredible loss. And he's able to deduct up to $3,000 from his income for this year. And just know, with such an incredible loss, he can deduct up to $3,000 this year, another $3,000 for next year, and then $1,500 for 2020, outside whatever other investment losses he might have had. So again, I'm no tax expert, but I guess if you want to claim a loss, you claim it. You can keep claiming the remainder of the money in other years. Might be something to look into. And this is what I was saying. When exactly somebody bought Bitcoin makes a big difference, says tax experts, on how much you will get charged. So, yeah. And then it goes on to talk about you can make a donation in cryptocurrency that'll offset some taxable events. But either way, something to look into. Now let me share with you what I think. Is the reason that we're seeing so much loss and weakness this fourth quarter because of taxes? I tend to think it might be more because of losses rather than gains when you're filing taxes. But it leads me to this question. If capital losses can only go up to $3,000, then it's really not the big money. Then it's really to get that loss on your taxes. I can only see, these institutions, they're investing way more than $3,000. And I'm not sure how taxes work for corporations or institutions. So if it correlates to them, that could be. But if institutions can only claim up to $3,000, then I really don't think this is the reason. Me, personally, I still think this is just a natural correction because we saw the market rally so high. We're seeing, obviously, a very high correction that correlates. That's me. Anyway, again, if you've gotten any value from this video, feel free to give it a like. It just helps me grow as a channel. And feel free to subscribe. Join the team. If that guy that commented this wants to comment again for this video, I'd love to hear more. I'd love to generate a discussion down below. And anyway, team, I'm about to go get maybe a Christmas beer, Christmas ale. And we'll see you tomorrow.